Alright guys, so I want to share with you some really useful information that you can apply to any stock before you buy it. And these are 3 rules that I like to use that have helped me make over 100k in profit so far, and are crucial if you actually want to buy great companies that make money in the stock market. Now the truth is, your portfolio isn't going to get any better by continuing to add more and more stocks to it. I think the real secret to a high growth portfolio is to have as few stocks in it as possible. And these are your high conviction growth stocks. Stocks that you've done the research on. Just a few stocks or so that you can hold for years that'll eventually grow and generate you several hundreds of percentages in profit like I've done. You really don't need to keep blindly adding more stocks or trading out of companies that you were planning on holding just because you saw a bad headline. All you need is a simple strategy that's easy to follow. So let me stop wasting your time and show you 3 rules that I use before buying any stock. And these are simple, but extremely powerful. And once you start using them, you'll instantly get better results in your portfolio because you'll be able to build out one with much more conviction. Now, the first mental model that I like to use is by asking myself this question: would I still hold the stock if it dropped 50%? Sounds intense, right? But this is as real as it gets. If you can't confidently say yes to that question, then you really don't believe in the business. I think you just believe in the stock price, and that's honestly not the right way to grow a portfolio. I ask myself this all the time because the best performing companies in history have seen multiple 50% drawdowns on the way up. Amazon, Tesla, Nvidia, literally all of them. So when I'm researching a company like IonQ or Palantir or another early stage company, I ask, do I understand why this company actually exists? And if the answer is yes, I size my position accordingly, and then all I have to do is sit back. So just to give you an example, when I first bought Palantir, I believe it was around $20 a share or so, and I held through everything. When the stock dropped to 15, I bought more. It then dropped to 10 and I still bought, and it dropped to $5 a share. And to tell you the truth, I was the furthest thing from panicked as you can get when I saw it drop to $5. I was so f***ing excited when it hit $5 because even though I was down a lot of money, it meant that I could pick up even more shares of an incredible company. And I mean, now that stock is past $100 a share. So all I'm trying to say is, investing shouldn't be this weird, anxious thing that keeps you up at night. It should be fun, easy, and extremely rewarding. Now for my second rule, you can ask yourself this: if this stock 10x'd, would it actually change my life? Because if it wouldn't, then what's the point of owning it? Do you kind of see what I'm saying? I mean, what's the point of putting only $10 into a stock if all you get is a $100 return? I don't want to be holding 40 tiny positions that each go up a little. I'd rather just size up on one stock that I have high conviction in, where even a partial win could mean a meaningful impact on my wealth. And I think looking at it like this will help you focus on bets that are both asymmetric and actually worth the risk. So this one's kind of about allocation as well, because people could put $100 into a stock they love, and even if they have money to continue funding it, a lot of people decide to never touch it again. And then when the stock actually shoots up 200%, all you've gained is $200. So honestly, unless you're living in rural Africa, $200 is practically nothing, unfortunately. With my investments, I want to be generating bare minimum 5 figures in profit. So you need to size your positions in a way that reflect your beliefs on the company. Otherwise, all you're doing is gambling with small amounts of money. So before investing in a company, go into it with a plan and really ask yourself if this stock has the potential to 10x from your entry point. And if it does, that's when you need to determine how much you can comfortably add to it so that your profits will actually be meaningful. And for the third and final rule, I'm gonna need to explain what I mean, or else you could potentially really mess up on this one and destroy your portfolio. So by this point, you've decided that you're fine if the stock drops 50% or more, you've done the research, and you believe that the stock has the ability to 10x from the current price, and you've sized your position accordingly. Now you need to ask yourself, does this fit the narrative of where the world is going? And this one is huge, because you want to own companies that actually make sense in the future, not just the past or present. Now, don't get me wrong, it can definitely be important to look at the financials of a growth stock, because there's definitely some key metrics you'd want to focus on. But if you're trying to find companies before Wall Street catches on to them, only focusing on the company's financials is a great way to miss the bigger picture. You really need to be paying attention and asking yourself what trends are emerging in the world. So what I mean by this is, currently there's a ton of narratives going on right now. Think about artificial intelligence, quantum computing, military technology, biotech, energy, robotics, and even decentralized finance. You need to ask yourself what infrastructures are being built and what kind of apps are successful companies like Amazon or Walmart secretly building in the background. And I think this one is extremely important because looking into what companies are actually building can oftentimes give you a lot of clues. So ask yourself, what technology will have to exist for society to function 10 years from now? Is it stablecoin infrastructure? Is it humanoid robotics? So asking myself these kind of questions is how I found IonQ early, and that's how I was able to hold Palantir for so long. And these can even be companies that might seem weird, controversial, or that people don't understand in the way that you do. And that's where real conviction is built. So again, this isn't about having more stocks. It's about building a high conviction portfolio that actually reflects your beliefs with a few hand-picked high conviction stocks that have the potential to make you a lot of money. The real flex isn't owning 50 stocks. It's owning 5 stocks that you can stake your name on, that you understand, and that you'd be proud to talk about 5 years from now when they've increased by 10 or 20-fold in value. Because the more intention that you're able to build, the more leverage you'll have. You'll know when to buy, when to trim your position, when to hold, and when to even walk away from your stock. Anyway, that's just something that I wanted to share. If you found this helpful, make sure to drop a comment below and let me know how you're thinking about your own strategy right now. Also, let me know if there's any topics that you'd like me to cover next, especially if you need some help building out your own high growth portfolio. Also, if you want to get more insight into my own portfolio, it's very likely to change over time, but as of right now, you can see it how it is currently. So check out this video next if you're interested. Anyway, thanks for watching, and I'll catch you next time.